Answer with Dan Proft and Amy Jacobson on AM 560. The Answer.
Top of the new morning, Dan and Amy, that is.
Do I start again?
Top of the morning, Dan and Amy. It didn't seem like it would be that difficult to say, but it was.
Some days words are hard.
So they're not using the term Bidenomics anymore, but they're still trotting out Captain Kangaroo to offer administration propaganda about the economy. So Janet Yellen sat down with one of the fungible CNBC Investotainment flacks to recite the lines that she was told to say about how strong the economy is.
I think we've got a good, strong economy. We've got very strong domestic demand. Consumers are holding up. Some low-income consumers are perhaps exhausting their buffers of saving that they built up during the pandemic. We're seeing a little bit more distress at the household level there. But generally, households are in very good financial shape.
Mm-hmm. Yeah, that's sort of the spin we've been hearing now, is that if you look at the numbers, beyond the surface where you have 3/4 of Americans say the economy's on the wrong track, or I feel less economically secure now than I did 3 years ago before Mr. 10% was installed. But if you look below numbers, they're really saying, like, I'm worried about the economy generally, but I'm doing fine. So it's a little bit more complicated than that, as Captain Kangaroo was telling us. So, yeah, the things are going very well. They've drawn down some of their savings. Secretary, you mean the phony baloney money you drop shipped all over the country that you're not doing anymore, not so indiscriminately. You're just doing it for, selected beneficiaries like people in the green energy industry. That's what they're drawing down, that phony baloney money, even as you continue to spend just as profligately, but in a more targeted fashion to prop up things. Because as we know, as famous pronouncement from the big guy back in the first term of Joe Obama, coming out of the Great Recession, we need to keep spending at the government level to avoid going bankrupt. And so that has persisted now into the third term, hasn't it? For more on this, we're pleased to be joined by our friend Jim Perry, the CIO and founder of Perry International Capital Partners. Jim, thanks for joining us. Appreciate it.
You're welcome, Dan. Good morning.
Good morning. Your reaction to what the good Secretary of the Treasury had to say.
And, it's back in the day, Treasury secretaries didn't go on the news because they had a job to do because they were financial people. And Janet Yellen is just singing a song for the administration. And it doesn't matter if she doesn't believe that it's correct or accurate or that she's telling the truth. It's just more gobbledygook from Washington, in my ears,
So you don't see the underlying economy as particularly strong, and some of the numbers that are coming out from people who are feeling the pinch of their purchasing power declining by a fifth to a quarter over the last 3 years is real.
The economy is not very strong at all. I mean, there are certain portions, as you said earlier, directed investment from the government is ongoing and very aggressive. Charging stations, semiconductor plants, wellness centers, hospitals, schools, this sort of stuff. That money is fiscal spending. I wrote about it in my weekly report Sunday night and sent it out yesterday. This is a stagnating economy. And when you get so much government spending and so much deficit spending on top of the excessive debt that we already have, it creates more liquidity into the system, more velocity of that money through the system, and prices rise. So stagflation means slow growth and high inflation, and that's the forecast really going into the election.
Well, that sounds like we need a little rate cut or 2 or 3 or 6 from Jay Powell.
It's kind of crazy. I used to be a fan of Jay Powell's, no longer. I I didn't like the pivot when he took so long to start hiking rates, and now I think he would really like to cut rates, and he can't because the inflationary numbers are not only higher than expected, they are rising. I wrote Sunday night that, the investors were thinking about 6 or 7 cuts this year, and the first cut now isn't expected until September 18th. So you're not going to get more liquidity from the Fed for 6 months, but that doesn't mean you're not going to get more liquidity from the government all the way up through the election. So that's why the stock market is still here.
So you're not getting. Oh, yeah. In other words, you're saying you may not get the number of rate cuts you want, but you're going to continue to get the printing and spending of money on the fiscal side of the house. Correct.
Aggregate government stimulus remains very, very high, and I would have thought that Powell would have said that our monetary policy, our rate cuts, our quantitative tightening has not worked because it's been overwhelmed by government spending. And he should have said that. And he's had ample opportunity to do it, and he hasn't. So too much liquidity. Rates are going to go up here. They're pressured to go up, and commodity prices are going to go up. And stock markets, I think the government will want to keep this up here through November. So I wouldn't be surprised if everything you hear out of Washington and all the proxies and the big investment firms will say, inflation's low and growth is great, and buy our bond fund or buy our stock fund.
So we should put, based on what you're saying, what we should actually do is put money either like in real assets like real estate or gold and Bitcoin at this point.
Yeah, I think, Larry Fink from BlackRock calls Bitcoin the new digital gold. And but 3 years ago, he didn't like it, didn't want to touch it. So the guys that have Bitcoin funds are making a lot of money out of it. And I think it's a very libertarian side of life. But for me, the Perry portfolio has gold in it. It has for about a month and a half when it broke out in March. I think gold's a good idea. I think Treasury bills in the short end of the curve are paying you 5 3/8 guaranteed return, right? That's higher than anything on the Treasury coupon curve. I think that the S&P 500 is trading at 21.5 times forward earnings going into earnings season. And in October it was at 17. So can we come down a little bit here? I don't want to buy stocks at these levels. I think everything you really want to buy, you can probably get cheaper.
I also note you mentioned Swiss francs because they're
right.
Well, two reasons. One, they're 40% backed by gold, and two, the Swiss prevent government debt from rising above 40% of GDP, unlike, say, the United States.
Yeah, I mean, it's in the Constitution. So I spent a lot of time in Switzerland, and I have my whole career. And what's great about the Swiss franc is, if you think about trade, right? The biggest component, a lot of Swiss guys say the dollar's going to go down. And I said, well, that's great. Against what, The euro is just as weak and just as indebted. The yen, another big trading partner, just as weak, just as indebted. China, another big trading partner, just as weak, just as indebted. So the question is, what is the dollar going to go down against, right? So what's great about the Swiss franc is it's a small currency, and you wouldn't necessarily use it for trade. But if you've got some saved wealth, it's a currency that will perform much better as these bigger governments try to inflate their way out of this debt crisis.
Just going back to Yellen, there was a funny moment last week where she was saber-rattling about the prospect of imposing tariffs on China, new tariffs, because
I saw that.
Yeah, because when it comes to subsidizing these green energy gambits, the Chinese communist subsidies are interfering with the American government subsidies, and we don't like that. Your subsidies, you're subsidizing. You're not supposed to be subsidizing your industries while we're subsidizing our industries. Then we have to subsidize. Then we're in a subsidy arms race. So we're going to put a tariff on your subsidized industries to protect our subsidized industries that we're protecting.
Exactly. I wrote about that too. If it wasn't so tragically stupid, it would be funny. It's just ridiculous. And I wonder sometimes if she realizes that, the people that listen to shows like yours actually have brains. Does she think everybody's stupid and doesn't understand what they're doing? It's almost insulting, I think.
I saw this. I mean, I'm not cheerleading this, but it just is an interesting development. You never know where innovation may come from, and we'll see how it actually happens in practice. But we're just talking about currencies, and you've heard a lot of the talk about the imminent demise of the dollar as the default currency of the world. Zimbabwe has introduced a new gold-backed currency, ZIG, that stands for Zimbabwe Gold, in an attempt to stabilize their economy, which has lurched from crisis to crisis over the last 30 years.
Right.
And there's a long way. It's the same sort of conversation we're having with about what Milei is doing in Argentina, which is a little bit more substantial. But I mean, do you see like those sorts of plays from countries like Argentina, which is a bigger player, or even smaller players like Zimbabwe, as indicative of a shifting global order?
I think there's a shift going on. I don't think it's going to be led by Zimbabwe.
No, of course. Of course.
And they have back their gold. I actually have a Zimbabwe $20 billion note in my office. Right?
I didn't know you were a billionaire. Oh,
yeah.
Wow.
Yeah. You could buy them on eBay or something back then. I think I got a stack of them for like $7. But I actually have a copy of a $20 billion Zimbabwe note. And their inflation has been rising for 30 years, as it has all over the emerging world. And they want to back their currency by gold. The trouble is they don't have any gold. They've only got $1.5 billion worth of gold. And, our government's burning through that about every 4 minutes, So it's really not that much money compared to something like South Africa that's got sort of 15 or 20 times as much. What I do think, if you look at some of these studies from the BIS and the UN and the World Bank, they would like to see a big basket of currencies from Zimbabwe to Peru to Angola, all kinds of Zimbabwe. They would like to see these currencies get stronger against the dollar. So there's probably going to be some kind of emerging market revaluation against the yen, the Chinese yuan, the euro, and the dollar. But that's 5 years from now, I think. But I'm worried about these big currencies. So your point is well taken. Governments are debasing their currencies, and the emerging market countries are just getting killed, right? They're just getting killed.
I can't wait till we have a $20 billion note in this country. And, of course, that should be Biden's face on that note. I think you would agree. Right?
The way
we're all billionaires now.
The way it's going, it's going to happen sooner or a few minutes. I don't know what it's going to be, but the trend is, CPI is probably around 3%. And it's not going to 2 anytime soon. It's going to 4, and it'll be at 4 by the election. And the bond market's not going to like it, and people just have to hunker down and try to save money and be careful what you spend because you're going to need your bucks.
Jim Perry, founder, CIO, Perry International Capital Partners. James, thanks as always. Appreciate it.
That's great, Dan. Thanks a lot. Have a good weekend. You and Amy. Bye-bye.
Bye. And he joined us on our turnkey.pro answer line.
Before you see it on TV, share it on Facebook, or read about it in the paper. Hear it here first. This is Chicago's Morning Answer on AM 560. The Answer.
Freedom begins with you. Learn how to spot and call out corruption like the Edgar County Watchdogs do. On Saturday, April 13th, Breakthrough Ideas invites you to a training and panel discussion at the Abington Distinctive Banquets in Glen Ellen. Spend the morning interacting with